Hi, welcome to Digging to China. I'm Dong Shong. In August, China's economic data was dismal. Today, I'll focus specifically on the real estate data. In May, the Chinese Communist Party launched the May 17 real estate policy, marking an unprecedented move. First-tier cities nearly eliminated purchase restrictions, adopting a recognized house, not a loan approach. The mortgage down payment ratio was lowered to historic lows, and the minimum interest rate for mortgages was removed. Additionally, the central bank set up a special fund of 300 billion yuan to buy up existing properties. So, why does the real estate sector still show a failing performance 3 months later? Data from the Statistics Bureau indicates that price declines are widening in all cities nationwide, with second-hand homes seeing even sharper drops. Transaction volumes are decreasing, and the growth rate of real estate development investment has continued to decline from January to August. Looking at the data from private institutions, the situation is even more troubling. From January to August this year, sales for the top 100 real estate companies declined by 38.5%. In August, the average price of second-hand home in 100 cities dropped by 0.71% from the previous month, marking a 28 consecutive month of decline. Rental prices are also concerning. In August, the average rent in 50 cities fell by 0.2% month-on-month and by 2.13% year-on-year. It's clear that the May 17 policy introduced this year has not managed to prop up the real estate market. Now is the time to take stock of the underlying logic driving China's real estate market. The property sector is just the surface. Behind it lies a web of interconnected factors like a fiscal policy, monetary policy, government bond issuance, and unanchored money printing. Simply put, understanding China's real estate market means understanding the broader Chinese economy. How much of China's GDP does the real estate sector contribute? Including related upstream and downstream industries, it's roughly 40%. Since the real estate crisis began in 2021, China's GDP growth rate has been on a downward trend. From 2022 onward, GDP growth has barely held at around 5%. In a few years, it could drop to 4%, then 3%, and within a decade, it might shrink to just 1%. There are numerous economic models that estimate China's GDP growth, but they all point to the same downward trend. The key factor driving this decline is the collapse of the real estate sector, which has significantly weighed on China's economic growth. It's unlikely that the real estate market will hit bottom within the next decade. I've previously done an entire episode on the relationship between household debt and housing prices, so I won't repeat that here. For years, land sales have been the main source of revenue for local governments. But since the 2021 real estate crisis, there has been a noticeable decline in land sale income across all levels of government. To make up for this shortfall, they've turned to issuing more special purpose bonds. Consequently, the interest payments on local government debt have surged. Before criticizing local governments for reckless borrowing, it's important to recognize that the central government's finances have been following a similar pattern in recent years. Since 2021, an analysis of the Ministry of Finance's accounts show that the annual fiscal deficit has surpassed 8.5 trillion yuan, the highest on record. The ministry manages 3 key accounts: the general public budget, the government fund budget, and the state-owned capital operations budget. In total, these 3 accounts had a deficit of 8 trillion yuan in 2022 and 8.5 trillion yuan in 2023. In comparison, the deficit in 2019 before the pandemic was just 5 trillion yuan, and prior to 2019 the average deficit was even lower, around 2 trillion yuan annually. So let's reflect on this gap. Do you think this year's deficit will be higher than last year's? Unfortunately, The Ministry of Finance's data reveals that when we compare the figures, we see that this year, the combined deficits from the general public budget and the government funded budget have already surpassed last year's levels, with an increase of about 15%. Based on this growth rate, we can estimate that this year's fiscal deficit could exceed 9 trillion yuan. In contrast, last year, China's GDP increased by less than 6 trillion yuan, which is significantly lower than the fiscal deficit. It's akin to saying that last year I only made 60,000, but I borrowed 80,000 from the bank to spend. This year, my income remains 60,000, yet I'm planning to borrow another 90,000. If we came across someone like this in real life, we'd likely label them a spendthrift. Currently, China's fiscal situation is a classic example of that. Therefore, we can reasonably predict that this year there will be an increase in government bond issuance due to the substantial fiscal gap. This year, there's been heightened interest in whether the central bank is resorting to unanchored money printing, and this concern is linked to the fiscal deficit. With the government heavily in debt and the GDP growth stagnating, it appears that the only viable solution to the debt crisis from a macroeconomic standpoint is for the central bank to initiate the quantitative easing. We all know that the central bank has a strong inclination toward unanchored money printing, as it appears to be the most effective way to tackle the debt issue, particularly given China's foreign exchange controls. In reality, the central bank has been discreetly increasing the money supply for years, hiding behind these controls and unwilling to expose the last layer of cover. For example, injecting several trillion yuan now and launching another major economic stimulus akin to 2008 might seem essential, but unlimited quantitative easing has its consequences. The primary cost is the value of the yuan, and it could also impede the yuan's internationalization, as a currency that is excessively printed will ultimately lack credibility. Alright, let's return to 2021 and discuss real estate. The foundation for real estate in China was established with the tax sharing system in 1994. Then, during the 2008 global financial crisis, a substantial 4 trillion yuan stimulus was introduced. In 2015, another wave of price increases aimed at clearing inventory occurred. Since then, the Chinese economy has become tied to real estate, making it difficult to break free from that reliance. From today's perspective, do you think the 1994 tax sharing system to the 4 trillion yuan stimulus in 2008 and the 2015 price increases aimed at reducing inventory were all losing strategies? Why were they losses? Because China's population structure has deteriorated. The swift rise in housing prices has made it difficult for young people to keep up, prompting many to decide against having children. Consequently, the labor force is declining, and the aging population issue has emerged much earlier than anticipated. What's even more alarming is that the years of rapid real estate development in China worsened the inequalities in the country's distribution system, resulting in a situation where the nation is aging before it has fully prospered. This is arguably worse than what Japan faced in the 1990s. The key difference is that Japan was genuinely wealthy at that time, while many in China have yet to achieve true affluence. As a result, the shortcuts taken in the past have become debts that need to be repaid today. The economic growth fueled by real estate came with the cost of a deteriorating population structure. People are the future tax base. Without a healthy birth rate and a sufficient labor force, a country will experience a shrinking tax base and rising deficits. I haven't yet addressed the social welfare debts that have accumulated over the years due to the dual-track system implemented both within and outside the Chinese framework. Since its inception, the Communist Party has exploited farmers, leaving them owed a debt of welfare benefits. In the 1990s, Zhu Rongji's reform led to widespread layoffs in state-owned enterprises, creating another welfare debt to those workers. Today, employees outside the bureaucratic system receive benefits that are significantly lower than those within it, failing to meet international standards. Yet, they bear the heaviest tax burdens. This represents yet another debt incurred by the Communist Party. Unfortunately, even if the party now intends to address these debts, the fiscal deficit has reached a point where it cannot increase these expenditures. Currently, the fiscal deficit is 8.5 trillion yuan, while farmers receive only a couple of hundred yuan in retirement benefits each month. If we were to increase their pensions and improve their healthcare and maternity benefits, the deficit could potentially surge toward 10 trillion. That is why I can't support any of the Communist Party's bureaucrats. None of them are forward-thinking. They all prioritize the interests of their own privileged elite. Not a single one has ever considered repaying these debts. Even 10 years ago, when China was at its wealthiest, they chose to overlook the needs of these individuals. I genuinely believe that the Communist Party behaves like a bandit. To them, China is merely a resource to be exploited. Once the resources are depleted and the wealth is exhausted, they might just walk away. They have never had a long-term vision for China. They are only here to extract as much as they can. The Chinese government's real estate bailout strategy over the past 2 years has centered on one goal: slowing the decline in housing prices, largely to support GDP. However, I see these efforts as futile because China's housing prices are unsustainable. First, the shrinking labor force means fewer potential home buyers. Second, the distribution system has seen no reform and it remains highly unequal. Ordinary people aren't seeing their wealth grow, so they simply can't afford to buy homes. In fact, their spending power is declining, let alone their ability to purchase property. A third factor is the withdrawal of foreign capital. Chinese assets have lost their attractiveness to foreign investors, further shrinking demand. Rather than sinking hundreds of billions or even trillions each year into propping up the real estate market, it would be far better to channel that money directly to households. We've already examined the fiscal situation, and increasing the deficit is out of the question. It's already alarmingly high. However, the issue of improving people's livelihoods is urgent. Without improvement, China's economic free fall will drag on even longer. The only viable option is to reallocate the fiscal spending, cutting unnecessary expenditures, and directing those resources to support the people. Ultimately, it comes down to repaying the debt owed to the people. As long as the Communist Party refuses to settle this debt, the people will respond by refusing to have children, leading to mutual ruin. Now let's recap. The real estate policy introduced on May 17 this year was heavily relied upon by Communist Party, aiming to slow the decline in housing prices and prop up GDP. To this end, the central bank injected 300 billion yuan and local governments made large-scale property purchases to stabilize prices. Yet, 3 months have passed and the real estate market continues to decline without even a dead cat bounce. This raises the question of whether those billions were worth spending. Since the housing crash, local government revenues have fallen, prompting them to borrow heavily to cover the gaps. But instead of directing spending toward improving public welfare, they continue pouring money into inflating ineffective GDP figures. The central government is no different in this regard. China's fiscal deficit has hit an all-time high. While GDP grows by 6 trillion yuan annually, they are running deficit of 8 to 9 trillion yuan. The gap is so massive that they have no choice but to issue more government bonds, which will eventually push the central bank to abandon its last safeguard and resort to unlimited quantitative easing to erase the debt. This would trigger a collapse in the yuan's credibility, leading to a sharp devaluation. Right now, it seems the Communist Party is speeding down this path with no one stepping in to hit the brake. Back in the day, they made their fortune from real estate, and now it's the real estate dragging them into the abyss. Because in the end, all debts must be repaid. The government has long owed the people far too much for too long, and now it's time to settle those debts. As long as the debt remains unpaid, even without the power of a vote, the people can choose to stop having children, leading to mutual ruin. Thank you so much for watching. If you find this video helpful, please like it, drop a comment below, and hit the subscribe button right here. It really helps YouTube to suggest my video to others. I'll be back with more content soon. Until then, stay well.